Well, I think I'd start just with Bitcoin. Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY, and you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so it's an asset class. As it goes into other funds, it's going to become structural. The halving is going to cut the organic supply of natural sellers in half around April 20th. That means there's only about $32 million a day of natural sellers. And the price of Bitcoin is going to have to adjust up in order to meet that investor demand. So I think that's what's going to happen next to the asset class.
Wait a minute, everyone. Welcome to BitcoinZilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. BitcoinZilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with BitcoinZilla. Subscribe now. In today's video, Saylor discusses the latest Bitcoin rally, the impact of spot Bitcoin ETF on this company, why Bitcoin should be considered digital property, growth outlook, and more. So without wasting any time, let's dive into the video.
Yeah, so BlackRock is like the container ship or the super tanker of Bitcoin. They can take $1 billion a day into their capital structure, and they can haul that very efficiently, 25 basis points. MicroStrategy is like air freight. We got higher performance. So what's going on here? MicroStrategy's got leverage. If we borrowed $800 million at 62 basis points, is there any company in the world that you wouldn't like to invest in that could borrow $1 billion at less than 1% interest to invest in your best idea? So we get that very intelligent leverage. It's non-recourse, it's unsecured, and then we buy Bitcoin with it. That leverage gives us volatility. It gives us performance. The performance gives us volatility. The volatility attracts capital, and we can then leverage more. It's kind of intelligent because it's convertible debt. It's given our shareholders more Bitcoin per share this week than they had a few weeks ago. So it's very accretive for them. And it's pretty compelling for every investor. If you're Bitcoin curious right now and you want to buy Bitcoin at the all-time high, how do you get the upside in Bitcoin with downside protection? MicroStrategy sold $800 million in debt, and we have $13 billion of Bitcoin on the balance sheet. So we're giving you an over-collateralized loan and the upside. But if you're a Bitcoin maximalist and you love Bitcoin and you want to hold it forever, the ETFs charge you 25 basis points. MicroStrategy is accreting. We're giving you a yield against your shares in a tax-efficient fashion. So the maximalists like the equity. The hedgers, they kind of like the upside with downside protection. The traders love the vol. You know, we've got 100 vol asset here, and they just like the vol. So we're unique because you can't really trade options on the ETFs, and an ETF isn't going to issue a convertible bond with upside to Bitcoin, but downside protection.
It's still early in the Bitcoin bull market because the BTC price of $71,000 is equivalent to the $20,000 mark of the previous bull cycle, according to Willy Woo. Woo's Bitcoin price model upper bound is $337,000. Bitcoin breached the record $71,000 mark on March 11, 3 days after Ether surpassed the $4,000 mark for the first time since 2021. Despite Bitcoin surpassing $71,000, the bull cycle is only starting, according to Woo's price model, which is based on a composite of various metrics set to gauge investor behavior. Woo wrote in a March 11 post on X, BTC at 71 puts us your asterisk, in visual of the upper and lower bound models. The upper bound right now is $337,000. So this bull market is still early, equivalent to 20 of last cycle. Meanwhile, the current bull market dynamics might result in an earlier macro top, compared with previous cycles, argued analyst Rect Capital. He wrote in a March 11 X post, If the accelerated perspective turns out to be true, then the next bull market peak may thus occur in 266 to 315 days. That's December 2024 or February 2025. Additionally, Bitcoin analyst CryptoCoin also expects Bitcoin's 4-year cycle to accelerate by as much as 1 year. The analyst wrote in a March 11 X post, "With hashtag Bitcoin entering price discovery mode and new ATH a year earlier than usual, we may be witnessing the death of the 4-year cycle. Our before, perfectly structured cycles would have called for a top late 2025, but we seem to now be right on track for a top late 2024. According to pseudonymous Bitcoin analyst Dave the Wave, Bitcoin could rally toward the $170,000 mark by May if the bullish momentum continues, based on technical indicators, such as the weekly moving average convergence divergence, MACD. Traders often use the MACD to assess the potential entry and exit points. The pseudonymous analyst wrote in a March 11 X post, "If the nascent parabola were to continue into a full-blown parabola, an argument for nearly 170K in May. However, these price targets are becoming modest in the current bull market. For example, Cathie Wood said on March 7 that ARK Invest's long-term Bitcoin price target is well above $1 million. That target, it was before the SEC gave us the green light, and I think that was a major milestone, and it has pulled forward the timeline," said Wood, referring to the regulatory approval of the spot Bitcoin exchange-traded funds in the United States.
First, with regard to Bitcoin, no, there's no doubt in my mind Bitcoin was a better investment at 17,000 than it was at 65,000. I take the Warren Buffett view on this. Bitcoin's a superior investment to gold, equity bonds, and real estate because it's digital. You can trade it 1,000,000 times faster than conventional assets using a computer. It's available. Most other assets only trade less than 20% of the time. Bitcoin's trading 168 hours a week. We bought $800 million of Bitcoin, and a lot of it we bought over the weekend when all the conventional markets are closed. It's global. It's the most widely recognized and trusted investment asset in the world right now. It's ethical because it's the king of all commodities. There's no issuer. There's no company. There's no country controlling it. And fundamentally, it's useful. Thousands of market makers can trade it all the time. Millions of companies can trade it. Billions of people. If you want to buy a house on Saturday in Africa, this is the way to do it. If you want to buy a car on Sunday morning, this is the way to do it. So it's a pretty great asset. It's the greatest of the assets in my opinion. There's no second best asset. So I didn't have any question about it. We're just waiting for the rest of the world to realize how good it is.
Senior Bloomberg ETF analyst Eric Balchunas says the chances of an ETH ETF approval grow slimmer every day the SEC maintains its radio silence with prospective fund issuers. A lack of communication from the United States Securities and Exchange Commission around other exchange-traded funds, ETF, toward issuers could be a bad sign for those hoping for other ETF approvals by May. Speaking to Cointelegraph, Bloomberg ETF analyst Eric Balchunas said there were more than a few reasons he's now downgraded the chances of Ether ETF approval to just 35%. The main thing is the fact that we're 73 days from the final deadline, and there's been no contact or comments from the SEC to the issuers. That's not a good sign, Balchunas said. The SEC has to give comments and the issuers have to work on correcting them. They may have to refile, and they might even want to have a couple of meetings. It's kind of a long process, said Balchunas. He added that he'd also sourced good intel to suggest that the SEC may be giving the silent treatment to prospective fund issuers on purpose. Balchunas also said SEC Chair Gary Gensler's stance on Ether could also play a part, arguing that Gensler still thinks of Ether as a security and may be unwilling to endure another round of the political blowback he received following the approval of the spot Bitcoin ETF and the SEC's court loss to Grayscale in August 2023. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.